Good morning, everybody. For today's Big Monday update, I wanted to talk about interest rates and what they really mean. This always comes with an asterisk because this is based on the average 200K home purchase with average interest, average taxes, all that good stuff. This is very much not specific to any property. And please understand these numbers will change based on your specific market area, your interest rate, obviously your insurance, things like that. But this is just a general guideline for your information. Today, I really want to break down what that big percent interest means and how big of a difference it truly makes when you start doing the math. So what you'll find is I broke down the average $200,000 home purchase over the course of 30 years for an FHA fixed interest loan. Long story short, that's basically the average loan purchase that we're seeing nowadays. So for this, I've broken it down into four categories at 3.5, 4, 4.5, and 5% interest. You can see right off the bat, obviously at 3.5% interest, you've got a nice, clean and easy $1,500 a month payment. And your total interest paid, not the total loan, but the total just in interest that you'll be paying over the course of 30 years is almost $150,000. Now, you see it bump up to 4% here, which seems like a very minor increase, only 0.5%. But in actuality, it makes a pretty significant difference. It bumps up our payment almost $60 a month, and our total interest paid goes up almost $20,000. Now, mind you, you don't see this because, again, it's over the course of 30 years, but it really does start to add up. It's almost, $1,000, well, not really, about $800 a year, but still a pretty good chunk of change. Next, we get into the 4.5. So when you look at 4.5 versus 3.5, again, 1% doesn't seem like too much, and yet the payments go up over $100, and the total interest paid goes up over $40,000. Now that, of course, over 30 years, you'll really start to feel that's, 1,200 or so a month, and that is an even more significant amount of money. Now here's where it gets pretty crazy. So a lot of the interest rates that we've been seeing lately because of, for whatever reason, this being the rate that you qualify for, that bumps up your payments to $1,671, almost $171 difference. And then the difference between the two total amounts of interest paid here, you've got, approximately $61,000 over the course of those 30 years. That's an extra $2,000 a year in just interest. And again, it's so important, and the reason I break this down is because all of this extra money isn't going anywhere, it isn't doing anything, it is purely going to your mortgage lender as interest. That is why this interest percent is so important, and it's so important that you understand it. Because to settle and say, oh, well, this lender's offering me, 1% interest more, but he's willing to, say no closing. Well, saving $5,000 up front is great, but when you're paying in the form of $40,000 over the course of 30 years, that $5,000 doesn't look so great. And so a lot of the times when we talk about these zero down home loan programs, we mention how you'll have an increased 0.5%, increased 1% interest rate. This is the true cost. So saving $5,000 up front in order to save $5,000 up front, you could see yourself costing 40, 60, almost $70,000 over the course of this loan. So again, this interest rate is really, really important. Now, what happens here is, again, this is the average home loan, but as you get into different loan types, whether you're VA, conventional, you start getting into factors like private mortgage insurance that we broke down in the other video, which probably will be our next video because that one is just a whole subject in and of itself. But this is just the general breakdown, and as we go into other loan types and we start breaking those down, especially conventional loans, they will also make a pretty drastic difference on total interest paid. But the general rule that I would like to advise everyone on is that in real estate, especially with loans, everything comes at a price. So if you're saving a lot of money down up front, you're likely going to be paying a lot more interest on the back end. If you're willing to put down a little extra up front, you're likely going to save tens of thousands of dollars over the course of the loan, which really just depends on your financial need and fiscal goals. If you're okay paying that because hey, I'm going to pay this loan off in 10 years and I just need help with the down payment now, well then, hell yeah, totally do that. It's just, the best part of working with our team is we're going to sit down, we're going to analyze all of this. We're going to discuss it with you, we're going to break it down, and we're going to make it as easy as possible to understand your best possible route so that you can save the most money, have the best house, and be truly happy with your experience. Because here at the Scurlock Group, we are family and we treat you like family. We truly want what is best for you. So everybody have an amazing Monday here. Hope everyone had an awesome weekend. And of course, if you have any questions about this or anything else at all when it comes to real estate, reach out. We have your back and we truly look forward to helping. Thank you.